Hi, and welcome to the Stock Scores Market Minutes for September 24th, 2012. This week's topic, the opinion flip-flop. I'll get into that in a moment. A reminder to subscribe to this YouTube channel, that's StockScores.com's channel, so that you can receive instant alerts when a new video is uploaded. All right, let's get into the opinion flip-flop. Market commentators seem to be constantly changing their opinion. If you listen to the financial news on a regular basis, you will know that one day everyone seems to be bullish, and then just a few days later, everyone seems to be bearish. Listening to these comments can cause you to time the market poorly, and you might even go crazy. Why do opinions change so often, and what is the best way to gauge the market's trend? One of the things that you have to keep in mind is that the media tends to seek out commentators and news that can explain what has happened. If the market goes down, well, then they try to find someone who is bearish to explain why the stock market is doomed and why it should have gone down today. If the market goes up, well, then they reach into their optimist file and find someone who is bullish or has been bullish and can explain what is so wonderful about owning stocks. This is reactionary rather than predictive. If you want to get good at predicting the market, you need to look at the market trend on multiple time frames. Here is a trend line drawn on the S&P 500 ETF SPY, and you can see that that trend line is sloping upward from left to right, and therefore we can say that since June this market has been in a bullish trend and remains so because the trend remains up. We have not yet violated that upward trend line. Switching over to the intraday chart, we can see that long-term upward trend line still, but over the last 6 or 7 days, we can also see that the trend has been falling from left to right. Now, what has happened is that although there has been some bearish sentiment in the last week, we have not yet violated that upward trend line. Now, if you listen to the media, you will hear lots of bearish comments over the last week because the prices have been falling. Well, really all that's been happening is the market is taking out the emotion that came with the announcement of the next round of quantitative easing from the US Fed and of course from the ECB. Well, that happened early in September, and it caused investors to get too emotional, to send prices higher too quickly. And at some point, the market has to take out that emotion, and it does so by pulling back to its trend line, just as it did in the late stages of August. You know, if you recall, late in August, early in September, it really felt like the market was terrible, but it had not yet broken its upward trend line. And when it hit the upward trend line, it bounced off of it quite nicely, and we got that wonderful rally through the second couple of weeks of September. So, what is the market telling us now? Well, as I said, with the S&P 500, the market is in a bullish trend, but because it ran away from its trend line, it is now taking out the emotion, just as it did in middle of June, early July, middle of August. Over and over again, we see this process where the market runs away from the trend line, and then it pulls back to the trend line where ultimately it bounces. I expect that this process will play out in the next week or two. The market will probably slowly move back towards that trend line, and at such a point, the market will get better. Now, keep in mind, when you're listening to the media, they're going to be telling you what a wonderful market is when the market has run away from the trend line, because that is when everything looks great. That is when the market has been going up for a number of days in a row. The problem, of course, is it is at that price when there is likely to be a pullback, when we are likely to see weakness in the near term. So, listening to the general media, and there's people in the media who get this right eventually, but most of the media are reacting, they're reporting on what has happened, and that will encourage you to buy the market when it has run away from its trend line, exactly the wrong time to buy, and it will encourage you to sell the market when it is approaching the trend line, simply because the feeling, the mood with the market action will be negative. Next chart is the XIU. You can see here that this market ran away from the trend line in middle of September. It is now pulling back. We're almost back to it, and so I expect that this market will bounce soon, probably in the next few days, and it'll take a little bit of time off of the bounce, and then it should start to resume that upward trend. I am optimistic about the Canadian market. The Russell was in an upward trend from June, but a relatively shallow one. It has now picked up the pace. You can see that I've drawn a steeper trend line from the start of August in through September. And again, we ran away from that. We're now pulling back to it. I expect a bounce in the next week or so. In the short term, expect a little bit of weakness. Longer term, this market should continue higher. Treasuries sold off with the announcement of QE3 or QE Infinity, whatever you like to call it. And we are now making our way back up to the downward trend line. But the fact remains, this market is in a downward trend, and therefore we should be optimistic about stocks and pessimistic about treasuries. US dollar has really fallen quite sharply in the last couple of months, too sharply in fact. It has run away from its downward trend line. It's moving back up in the short term here, probably gets back up to that downward trend line where it should get stuck and start to move lower again. So, short-term US dollar's been strengthening, but it has not yet broken the bearish trend. Gold is in a good upward trend again after really being pretty quiet and sideways for many months. It ran away from that trend, starting to pull back to it. Doesn't have as far to pull back as stocks, and so I think we'll see this market bounce sooner than the stock market, and it sort of coincides with how the Canadian stock market looks, where the Canadian market didn't pull away from the trend line as much and therefore is likely to bounce sooner. Now the oil market rallied up to the long-term downward trend line. That rally from July in through September simply took it up to the long-term downward trend line. It got there, it got stuck, and it has broken the shorter-term upward trend line. So I'm, maybe on the bearish side of neutral with oil because the long-term trend is bearish and it's just broken the short-term upward trend line. So that tells me that we're either sideways or lower in the weeks ahead on oil. So US stocks, Canadian stocks, and gold, I am optimistic. Oil, I am neutral. The long-term trend for stocks and gold is up, but expect short-term weakness as investors digest the recent rapid gains. Oil is stuck under resistance and will take time to build optimism. That has been the Stock Scores Market Minutes for September 24th, 2012. Trade well. Have a great week in the market.